Good afternoon, folks. Hey. I am an associate member of T3 Trading Group, which is an SEC registered broker, dealer, and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure should be the same as yesterday. The team over here at T3 would like to remind any T3 Trading Group, specifically T3 Trading Group traders, that they need to do their annual affirmations, and there should be an email in your inbox that came out when, Amy? Yesterday? That came out yesterday. So please do your annual affirmation to get it off the compliance to-do list. All right. Strong day. Most of the strength came through the gap up, to be honest, especially if you look at the IWM. The IWM high of the day was the second the market opened, and pre-market it was even several dollars above the high of the day at a certain point today. Qs, on the other hand, were able to trade up a little bit during the day, but most of the move came from the gap. SPYs finished up 1.65%. Qs finished up 2.4, let's call it 2.5%. 2.5% gain in the NASDAQ, not insignificant. And the IWM up 2%, and this is with it being like $3 off the pre-market high at the close. Pre-market high, this thing was working towards 227, and I was shorting up there pre-market, so it was a good, cute little day trade. But I was nervous. I was honestly to short the IWM as extended as it was up there. I thought that they could potentially really run that index. And then something interesting started to happen at around 7 o'clock this morning. The TLT started taking a real dive. Let's pull up the pre-market chart. TLT started to take a real dive starting at 7 o'clock. And starting at 7 o'clock, the IWM peaked out to 26.75 or so and started showing a lot of relative weakness with the TLT move. And the Qs, which were gapping up less, really just didn't pull back at all and kind of continued their grind up and continued to get a further boost while we were doing the morning meeting at 9. So that was a pretty interesting flip of the script and did not at all, to be totally honest, meet my expectations for what a 50 basis point cut would do. I thought that, 50 basis point cut, we could break out, we could move higher. But if we did, I really thought the IWM would lead that. And again, at the end of the day here on a percentage basis, the IWM is up only slightly less than the Qs. It's not a huge move there. But the interesting part, I really think, is this TLT down move, and it did recover a little bit during the day. It's actually continuing to recover a little bit here after hours. It recovered off those pre-market lows a little bit. But it was just interesting that interest rates have been moving higher since the Fed did this 50 basis point cut. Because on the surface of things, you would think, all right, 50 basis point cut, it's going to be best for your IWM, XBI, interest rate sensitive stocks. And I thought that it would actually make Mag 7 heavier, especially as you come into a seasonally weak period. But then, for whatever reason, could be that Jerome Powell's commentary was not dovish enough on a go forward basis or whatever it is. They were selling this down, and that actually enabled for intraday relative strength in the Qs. Though everything did close a little bit off its high, it really didn't turn into a trend day. Oftentimes, higher probability than usual. I think on average, like, I'm guesstimating here, something like 20% of days are trend days, which means that 80% of days are not trend days, right? 80% of days are going to be more rangy. So on any given day, if you just walked in and blindly closed your eyes and you didn't know anything about the technicals or the news or anything, there's a higher probability that it's going to be a range day than a trend day. The day after a Fed day is an exception to that, where the probability increases of there being a trend day, but it certainly doesn't mean that it's 100%. And what I said in the morning meeting was that the gap is so big that if the market wants to be strong today, while we could have momentum that could get us up to, I think I said 574, we actually got up to 573. While we could have momentum that could trend us up to 573, 574, it's going to be hard, I thought, to get really too much after that big of a gap, because by the time we were opening this morning, we were opening in borderline extreme upside extension territory. So it made for a really tricky open, because we're opening in that borderline extreme upside extension territory, but it's only a kind of a day one up, and it's a potential breakaway gap for the entirety of the market. It's a breakaway gap for the S&P to new all-time highs, and it's the day after a news event. So if you were ever going to get the momentum that can make a higher price go even higher despite extension, it actually would be on a trading session such as today. But, you know, just kind of ended up giving us a little bit of first half of the day strength, a little bit of second half of the day it was a little bit weaker, but overall it was really kind of more of a range-bound trading session. And we closed here just under $10 of extension in the SPYs, but the ADMA will catch up further tomorrow. So unless we gap up big tomorrow, we won't be at extreme extension by tomorrow. The Qs basically closed at $10 of extension, so it's the same thing. But they'll be a little bit less than that tomorrow unless we have a really big gap up. And the IWM is fairly extended here. $6, just under extreme extension also for the Russell. So we'll see if this is just a day one that leads to continuation. Some of these stocks, some of these Mag 7 stocks traded so well today that it doesn't look like they want to stop. Meta, phenomenal breakout. They made it so hard to be able to buy that 540 breakout that we had been kind of buying for the last few days. Tesla, phenomenal rip and breakout in Tesla. I was still short Tesla from yesterday. It looked great. Luckily, I got a weak enough of a close yesterday that I pared down to very small positions short in Tesla, Qs, and NVIDIA, so it made it manageable for me on the gap. But I actually called out that 235 could be a momentum break higher in Tesla that could be buyable. So I actually hope, even though I was kind of battling this thing to the short side today and finished down, I lost money in Tesla today. Of course, I did look where it closed, and I was trying to short it, and I was shorted overnight. And I know some of you guys at certain points were picking spots to short as well. And it looks like mainly you guys did a good job, actually, on picking your spots to short. But really, I just hope that some of you guys bought the 235 breakout to the long side that we were able to talk about in the morning meeting. With that said, it looks like it would have been a lot of risk by the time the level actually broke because of the way that momentum was actually going higher there. But yes, so, I mean, some of these stocks just incredibly strong. Apple was another one, incredibly strong. I was able to make a very small amount of money short Apple today. Definitely nothing to write home about. Was able to make a few dollars short the SPYs via UPRO, a few dollars short IWM. Lost money in Tesla, and NVIDIA I probably made very small on with my intraday trading after, you know, obviously I was short small overnight and it gapped up against me. So that was like a big part of my day, though, was actually, and I hate having to, I don't want to say having to do that, I don't have to do anything, but I hate, you know, day after a Fed day, markets trading well, to be on the other side of it is usually not what you want to be doing. Did have kind of the extreme extension on my side to try to short, and I think I did an overall really good job picking my spots. But Tesla caught me in a few spots. Tesla really caught me. I was fine all day in Tesla. It caught me at the close. Caught me at the close here with this rip to these highs after I had taken this ad on this break, on the breakdown on the 245 bar. It was riding these moving averages so perfectly. Actually, I really shorted on the 240 bar. I said, if you can break this 21 EMA, I'm going to do a much bigger ad, which I did. And then the low here was 241.75. I had really big bids at like 241.50 and 241.25 to take off most of that heavier short that I put on. And then when imbalances came out, they were huge to the sell side for almost all of big tech, and almost all of big tech got hit down a little bit. You can see the Qs made new afternoon lows on the 350 bar when the imbalances came out, Apple had a massive sell imbalance. Amazon, Meta, actually I'm not sure about Amazon, but for the most part these all had like really big sell imbalances come out, with the exception of Tesla. And then Tesla flipped to a 900,000 share buy imbalance and just kind of ripped in my face. And really almost everything I lost in Tesla today, it came from like the last 10 minutes of the day, which just sucks. But is what it is. Happens in trading sometime, and it was a really fast move, and unfortunately just couldn't get more off on the downside, and the move that actually went in my favor was a little bit lower. But it is what it is. Still profitable day overall for me at least. And I traded these Qs to the short side very, very well, so I can't be too upset about it, but you always want everything to be perfect, and sometimes it's not. Trying to think if I really have anything else to say about it. I don't. You know, the real question is continuation. We're still in a seasonally weak period of time, but we just entered into an easing cycle. You know, traditionally the weakness starts next week after OPEX, but the last 4 years they would front run that, and the week of OPEX would be negative weeks. But prior to the last 4 years, you would actually see this week be positive, and then the next 2 weeks the market kind of get obliterated. So we'll see if September is going back to what it used to be prior to the last 4 years, or we'll see if this is different this time, which can happen. You know, like what I used to always say about doing any sort of seasonality or historical example of markets is, well, just because something happened in the past doesn't mean that it has to happen in the future. And that's 100% correct. But then I started to learn more recently in the last couple of years that a lot of the time seasonality happens for like technical reasons, really. There is forced buying and forced selling that has to happen at certain points of the year for various reasons that actually create the seasonal phenomenon. So it actually started to make me believe in seasonality a little bit more. But at the same time, just because something happened in the past doesn't mean that it has to happen in the future, and every situation is unique. And what I said yesterday, and then I repeated again this morning, is into a breakaway gap with the S&P. What we also know for this specific example of this period of time that we're in right now is that a lot of funds are underinvested. So into a breakaway gap higher, into all-time highs for the market, even though seasonally we're in a weak period of time, if this market is trading higher, there is a very real chance that the underinvested funds at a certain point have to chase. And even though almost always this is like the worst period of time of the year, the 2 weeks after September OPEX, it doesn't have to be that way. And there's a chance that those funds have to chase back into stock, which can bring us higher. And then there is also something to be said about just more and more people having more knowledge about the market, sometimes changing those traditional outcomes. So we'll see. Certainly things are looking strong. It was a little bit of a doji day today, so it wasn't like we got big commitment with the S&P closing at highs at 575, which could have happened with real upside trend momentum. So not 100% convinced on the bullishness of today's trading session, but it's definitely generally what you want to see if you're a bull in this market. We're at all-time highs, and we certainly didn't fail today either. So yeah, we'll continue to monitor. We got quad witching tomorrow, which is always a little bit of an annoying trading session, and then after we get through tomorrow, it's that real weak seasonal period of time. So we'll see if that leads to anything, or we'll see if this time is different, which sometimes it certainly is. But it's got me being a little bit looser to the short side of the market than I kind of traditionally would be when I'm looking at a market that is $10+ extended to the upside into a period of time that's seasonally weak. I feel like you have multiple layers of probability there to potentially be trying to look for those shorts. But watch out. TSC was on fire today. So was PayPal. What's up, Stefan? PayPal on fire with that news. TSC, big additional breakout back to recent highs. Nice moves in a couple of those names that we've been looking at. Am I in here shallin? Who's shallin? All right, that's all I got. I'm happy to answer any questions that anybody has. So feel free to shoot them on out. We got FedEx reporting earnings after the close. Not looking good for the home team on FedEx. FedEx drops 11% after cutting top end of year adjusted EPS view. They're expecting to add to their buyback, so that always helps to cushion things a little bit. No, gotcha. What else, guys? Any other questions? Any other thoughts? We got Nike up after hours. Elliott Hill will replace John Danaher as the CEO of Nike. Stock's up 7%. It's into a big gap. Yeah, APP was on my list for the RDR today. So that worked. You know, it was an interesting market because a lot of growth stocks, which should do better in a low interest rate environment, were really weak today. And this APP gave an RDR that was on my list today. I also had Palantir on the list for the 37 breakout, but that did not work because, again, growth was weak. And I had PayPal on my list for the $74 breakout. That worked phenomenally well, if anybody caught that. And then we talked about Tesla long through 235 today. If anybody caught that, it worked really well. It's just a trade. I'm fighting it short. But, yeah. Anybody else have anything? I have to meet up with someone this afternoon, so I don't mind doing a short one. But like always, happy to stick around and answer questions as well. Also got to get out to Long Island tonight. I gotta meet somebody for a drink, and then I got to get out to Long Island. So I've got a few things to do. So don't mind doing a quick one, but again, don't mind answering questions like always. From Tate, would you have expected this gap up with so many countries following the U.S. when it comes to easing and tightening cycles? Only reason why I could see a gap is other markets trading higher with that close. Yeah, well, I think that the Hong Kong 50 basis point cut certainly helped overseas and helped the China market. But it's hard. I mean, did I see us gapping up this big when we closed on lows? No, but I also wasn't necessarily surprised either, just because after the Fed like that, you can get this wacky price action where, you know, how many times have we seen it where the reaction for the first 2 hours after the Fed during market hours is one thing, and then the next day we trend in the other direction, or in the case of today, we gap in the other direction in a really big way. It's not expected necessarily, but shouldn't be surprising. It's not unusual to see just a big change the next day from what happened in the first 2 hours. Yeah, and I thought that according to Cyril here in the YouTube, the market's giving us some mixed signals. I agree, and especially off the open this morning, they made that pretty difficult. Yeah, Bank of England paused. I think that was expected, though. It's a pretty big cut in Hong Kong. All right, well, appreciate the question there, Tate. From Taff, on the 5-minute in Apple at 10:15 a.m., there was an upside tail. At 10:15, I see a 10:10 little baby tail, and I see a bigger doji at 10:30 that I called out as a short. We were wondering whether it was real or not. Oh, right, I remember that. I thought that was earlier than that. Or maybe that was the 10:10 candle. That was the 10:10 candle. We're speculating whether it was real or not. What causes those tails? Is it HFTs? No, it's usually just like a singular dark pool print that happens out of the market that messes up the chart. Like some sort of false print that went off that wasn't even necessarily real, but somehow went off. Where it's relatively rare, but every once in a while you'll just see like a big move that didn't actually occur, and immediately the stock is back to where it was, but there's this big move in the chart. Usually you can tell it's fake when there's no volume to confirm it. Like a lot of times if there's going to be a big outsized move, there's going to be a big outside volume tick. This one was a little bit hard to be sure because the volume was trading consistently big for Apple. And I didn't have all. Usually, I would have like an offer hour where I would know for sure it wasn't real, and I didn't in this situation. So I was not, and still am not 100% sure if it was real or not. But based on the volume profile, and I was kind of watching it, I didn't think it was real. But yeah, I think that answers your question. Lennar ripping on earnings. I don't know about ripping. All right, gang. I'm going to wrap it up there. Have a wonderful night. I'll see you all tomorrow morning. Quad witching day tomorrow. We'll see how we gap, and we'll take it from there. If you're on YouTube, give me that thumbs up button. I'll see you guys next time.